Hello students, in present video I am going to explain about fifth problem from depreciation topic. I am taking this question from Pankaj publications book. See the question first. On July 1st 2001, A company limited purchased a second hand machinery for 20,000 rupees and spent 3,000 rupees on reconditioning and installing it. On January 1st 2002, the firm purchased another machinery for 12,000 rupees. On June 30, 2003, the machinery purchased on 1st January 2002 was sold for 8,000 rupees, and on July 1st, 2003, a fresh plant was installed at a cost of 15,000 rupees. The company write off 10% depreciation on the original cost. The accounts are closed every year on 31st March. So calendar year they are following. And depreciation method is original cost method, straight line method, fixed installment method. Show the machinery account for the year ending 31st March 2004. This is the problem. Let us see the solution for this. Machinery account, date particular same amount, date particular same amount. First what happened? On 1st July 2001, A company limited purchased a second hand machinery for 20,000 and spent 3,000 on its reconditioning and installing it. So first we have to identify the starting year dates. They are following financial year now. So financial year ends with 31st March. Means it starts with 1st April. And when they purchase this first asset, 1st July 2001. So 1st July, before to that April means it will be 1st April 2001 now. And after July, March means it will be 31st March 2002. Therefore, starting year is 2001-2002. 1st April 2001 is the starting date of the year. 31st March 2002 is the ending of the year. In 2001-2002 year, they purchased this asset on 1st July 2001. So purchase date, debit side we should write. 1st July 2001, when they buy the asset, debit side, to bank we should write now, to bank account 20,000. And on the same day, they spent 3,000 rupees on its installation. For that also write down to bank account 3,000. So first asset cost is 20,000 plus 3,000, 23,000. And in the same year, they purchased another asset for 12,000 rupees. See the date. On 1st January 2002, the firm purchased another machinery for 12,000. So first year is what? 1st April 2001 to 31st March 2002. So 1st January 2002 date also falls between these two dates only now. Means this second asset also they bought in first year only. So debit side 1st January 2002 to bank account. Second asset is purchased for 12,000 rupees. First year last date. So 31st March 2002. On that day, depreciation we have to provide on these two assets. So first asset cost is 20,000 plus 3,000, 23,000. Second asset cost is 12,000. On these two assets at the rate of 10% per annum, we have to provide the depreciation. This 10% rate is given in the question only. Now first asset, how many months we used in this first year? They purchased this first asset on 1st July. So July, August, September, October, November, December 2001 completed. In 2002 up to 31st March now means January, February, March. Total 9 months they use this first asset. Therefore into 9 by 12 is equal 1725. Second asset they purchased on 1st January 2002. From 1st January 2002 to 31st March 2002. So January they used, February they used, March they used, 3 months they used. Therefore into 3 by 12, 300. Total in outer column 2025. And on the same date 31st March 2002, find out balance carried down. Debit total 35,000 minus credit amount 2025 is equal 32,975. For that write down by balance carried down. Two sides total, highest total, debit total 35,000, 35,000. Now come to second year. So this date, next date we should write on the debit side. 1st April 2002. We have to bring this balance now. So write down to balance brought down this amount 32,975. And in second year, there is no extra purchase, there is no sale. So second year last date is starting date 1st April 2002. From that date, if you count 12 months, ending date will be 31st March 2003. On that day, provide depreciation by depreciation account. First asset. This is fixed installment method now. Feature of this method is every year on original cost we have to calculate depreciation. So same these two values we cannot take for second year because these values are not for full year now. So first asset is used only for 9 months, second asset is used only for 3 months. But in second year from 1st April to 31st March, full year we have these two assets. So 1 year depreciations we have to provide. Therefore again we have to calculate depreciation amounts. So 23,000 cost of first asset on the 10% is 2,300. 12,000 cost of second asset on that at the rate of 10% depreciation is 1,200. Total in outer column 3,500. Then on the same day balance carried down. Debit total 32,975 minus credit amount 3,500 is equal 29,475. Further write down balance carried down. Two side total, highest total, debit total 32,975, 32,975. So second year is completed. Come to third year. Third year starting date. Next date to this date. So 1st April 2003. This balance carried down amount bring on debit side. Two balance brought down this value. And in this 2003-2004 year, what happened? See the question again. On 30 June 2003, the machinery purchased on 1st January 2002. 1st January 2002. Which asset we purchased? On 1st January 2002, the firm purchased another machinery for 12,000. This asset. What happened to this asset? Was sold for 8,000. And on 1st July 2003, a fresh plant was installed at a cost of 15,000. So in this third year, two things were happened. First one, this 12,000 worth asset they sold. Second one, a new asset they purchased for 15,000. First sales information we will take. See, 23,000 is first asset. 12,000 is second asset. Now third asset value 15,000. This second asset is sold on 30 June. So sale date, write down on credit side 30 June 2003. When we sell the asset, credit side by bank we should write by bank account. And they sold this second asset 12,000 worth asset for 8,000. Write down that sale proceeds here. And up to that date we use this second asset now. So from when to when we used? 1st April to 30 June. So April, May, June. 3 months we used. Therefore, original cost of the asset 12,000 into 10% into 3 by 12 is equal to 300. So second asset depreciation in third year is 300. Now in this sale, we may get a profit or loss. That we have to calculate in working notes. See here, calculation of profit or loss in sale. Second asset cost is 12,000 minus total depreciation. First year is 2001, 2002. Second asset depreciation in inner column it is available 300. Take that value 2001, 2002, 300. Second year is 2002, 2003. Second asset depreciation is available in inner column 1200. So 2002, 2003, 1200. Third year 2003, 2004, and depreciation on second asset is available here 300. So 2003, 2004, 300. These three amounts total in outer column 1800. So cost of the asset minus total depreciation is equal to 10,200. This is called book value. So 10,200 is the value of the asset at the time of sale. And in question he is giving that this asset is sold for 8,000. So we sold it for less now, means loss came now. So continuation, book value 10,200 minus sale value 8,000. So there is a loss of 2,200. If profit comes in account, debit side we should show. Loss credit side. So loss came now show on credit side. When loss comes on sale date only, therefore for loss also date is same 30 June 2003. For loss you have to write by profit and loss account 2200. Now sold asset, this second asset information is completed. Come to remaining information. On 1st July 2003, in question he is giving that they purchased third asset for 15,000. So debit side write down that to bank account 15,000. Now come to third year last date. So 31st March 2004. On this date, how many machines we have now? First machine 23,000. It is not yet sold. So first machine is there with us. Full year we have that. Second machine is sold, so it is not there. Third machine 15,000 is also we have. It is purchased on 1st July now. So from 1st July to 31st March only we use this third asset. So on this date, third year last date, we have first machine, third machine. First machine full year depreciation. Already it is calculated in second year now 2300. Same value we can show here. Again no need to calculate. And the third asset cost is 15,000 and at the rate of 10%. For how many months we use this? See, third asset is purchased on 1st July. So 1st July means July we have to count. July, August, September, October, November, December. Here 3 months now. January, February, March. Total 9 months we used. Therefore, into 9 by 12 is equal to 1125. These two assets depreciation in outer column 3425. Now finally find out the balance carried out. Debit total. These two amounts total is 44,475 minus credit amounts total 8,300, 2,200, 3,425. Is equal 30,550. So third year last date balance carried on is 30,550. Two sides write down the highest total, debit total 44,475, 44,475. So up to 2004 only he asked us to prepare account. So 2004 is completed, but asset account is not yet closed. Balance is there. Therefore, for next date, you bring that amount and stop the problem. So next year starting date, 1st April 2004, to balance brought down this value, 30,550. So this is the end of present problem. Take a screenshot of the solution. This is first page. Continuation and working notes. So this is the end of present video. Hope this video is helpful to you. Thank you.